Hello friends, let us understand how GST will work in India. India will adopt a dual GST model in which three taxes will be levied. The central GST, which will be levied by the central government, state GST levied by state government, and integrated GST levied by central government. In case of sale within a state, that is from one state to the same state, CGST as well as SGST, two taxes will be levied. In case of interstate sales, only a single tax called integrated GST will be levied. The rate of IGST will be the rate of CGST and SGST combined. Let us understand this through an example. In the first case, let's assume that the goods are moving from Mumbai to Pune to Nagpur. All these three cities are in the same state. These are the goods, central government and state government. So when the goods move from Mumbai to Pune, since it is in the same state, CGST is levied, let us assume 500, and SGST is levied of 500, since these two taxes will have the same rate. CGST goes to the central government and SGST goes to the state government. Now when the goods are resold from Pune to Nagpur, since these two are in the same states, again CGST will be levied, let's assume 1000, SGST 1000. The tax amount increases because the value of goods increases on resale. CGST is supposed to go to the central government, but we have already paid 500 on input. Therefore, input tax credit of 500 will be available and only remaining 500 will go to the central government. In the same way, input tax credit of the previously paid money will be available and only the remaining 500 will go to the state government. Now when the goods are moving, let's say from Indore to Bhopal and from Bhopal to Lucknow, since this is in the same state, in case of Indore to Bhopal, CGST will be levied and SGST will be levied. Since it's in the same state, the normal flow works. CGST goes to the central government and SGST goes to the state government. Now the goods are moving from one state to another, from MP to UP. Therefore, interstate GST will be levied. Since the rate of IGST is higher, the amount of tax will be higher. IGST is supposed to go to the central government. We have already paid 500 rupees to the central government. Therefore, input tax credit will be available. However, under GST, input tax credit of the previously paid tax to the state government will also be available. Therefore, we will have to pay only 1000 rupees to the central government. As you will observe, the central government did not get this money, but still allowed input tax credit on it. It is a loss to the central government. Therefore, this money will be transferred to the central government. In the third case, we will see that the goods are moving from Delhi to Ahmedabad and from Ahmedabad to Vadodara. Since this is from one state to another, IGST will be levied in the first transaction, which is, let's say, 1000 rupees. IGST goes to the central government. In the second transaction, which is from Ahmedabad to Vadodara, since it is in the same state, CGST will be levied, let's assume 1000, and SGST of 1000. CGST goes to the central government. We will get a credit of 500 from CGST and the remaining tax will go to the central government. But if you observe, the credit of IGST will be available against SGST also, and only the remaining 500 will go to the state government. Since the state government did not get the original 500 but still allowed the tax credit, it is a loss to the state government. Therefore, that 500 rupees will be transferred by central government to the state government. As you can observe, in the GST model, finally the tax goes to the state in which the goods are consumed. This is because GST is a consumption-based taxation. In GST, the tax will go to the state in which the products are consumed, not in the state in which they are produced. This is the crux of GST. Thank you and subscribe for more interesting updates. Goodbye.